Sorry, I'm getting on a little late here. Oops. You don't want to be looking at random things. Introducing a couple changes. One is I'm going to have an AM and PM edition, something I call Trader's Espresso. Before the market opens, it's going to be like a recap of yesterday's action and kind of what to expect as I see it, coming up. So because of that, then I'm going to be spending on the live casts themselves. I'm going to be spending less time on what the markets, like going over the indices and where they are. I mean, we'll talk about it briefly, but I'm not going to spend a lot of time on it. In the interest of just getting into kind of, live trading, which is why I'm here and which is why you may be watching, to actually kind of learn, from watching somebody trading live. So let's clean things up here. One thing I will say is that Wynn is hurting me substantially today. Steve Wynn announced his resignation as chairman and CEO of Wynn Resorts and Wynn Macau. Markets like that. The move was met with mixed reaction. JP Morgan upgraded the stock. A couple of others have downgraded the stock. I didn't see any changes in price targets, just upgrades or downgrades of the stock. But the market has spoken. The market is saying, yes, this is something that we like. Now, these expire in 2 days, so I'm going to have to figure out what I'm going to do today to kind of make up some of that lost ground. I'm just going to get right into trading futures because we've seen significant enough price swings in the futures. It's kind of hard trading futures when they're choppy. Choppy is a good thing, but when the amplitude of those moves is so tight, it makes it difficult to trade. You just get whipsawed. So what I've been doing the last few days is just kind of picking my spots. I haven't been trading the futures aggressively, but just sort of picking my spots and really paying attention to the stochastics and getting in on these moves when the time is ripe to do so, when I believe that it's a sustainable momentum move to the downside. I was looking at the NKD. It's kind of tempting only because the value of the ticks is 25 bucks a tick. I think instead I'm going to take a look at Russell or NASDAQ or the Dow for trades because they're $5 a tick and I can build positions, which means trading multiple contracts, but not all at once. Getting in, buying a contract and then adding to it if it works, if it's working for me. So yeah, look at the Dow. We're getting into. You can't see it. Move over here. So looking at the Dow, initially we're getting into overbought territory on the 4 and 50-minute time frame. We're seeing a potential move down. A decline in the histogram. So I want to wait till this full D crosses back up into oversold territory before I make a move. The Russell's actually looking more intriguing because we're seeing all 4 time frames in line with a move to the downside. It's a little bit of a mixed bag on the Dow, and the NASDAQ is not quite as convincing. It's not quite as compelling for me as the Russell, so I'm going to focus on the Russell then. And again, here's the reason why I'm saying that. The 1 hour 15 for 1 minute, not the 1 minute, but these 3 time frames are in line with a move to the downside. So the full D here kind of just basically it kissed that threshold, that 80 threshold, went a little bit above it. Now it's kind of coming in. So I'm going to want to get in when the 1 minute shows a reversal to the upside, crosses into overbought, and then comes back down again. That's when I want to initiate my first contract. I'm always tempted to do it right away. But then as soon as I pull the trigger on it, I start second guessing myself. I shouldn't have done that. Shouldn't have gotten in so soon. But the risk is, I mean, if this just, this may not have a chance to go up. Although right now I do like what I'm seeing on that 1 minute chart. Full K is turning up. We're seeing downward momentum slow down. We're seeing upside momentum increase. So this is a battleground right now. One of the things that I failed to do yesterday afternoon, I was considering what I was going to do with my position and when, and I was taking a look at the stochastics on the chart, and the stochastics were still telling me, yeah, I think that being short this issue is still a good idea. What I had not considered is, okay, what could happen to go against me on that? The obvious answer is either, something comes out that absolves Steve Wynn of all the accusations, which was highly unlikely, but still a possibility. Or, which is more likely, and this is what happened, is that he steps down, and that's what happened. The markets cheered it, and it went against me. And there's maybe still the possibility of selling short call or short puts against this to turn it from a bearish position into a bullish position. And right now the Russell's really fighting going up. Let's see what happens. See, this is what I'm talking about. As soon as I get in, it rips against me, and then I regret my decision. Oh, jeez. So what can I do in that case other than maybe write it back up? Try and scalp the ticks to the upside. I don't like scalping as a trading practice, as a technique, but it has worked for me. So let's go ahead and do it. So yeah, now this upside move is accelerating. Or was. I want to see this full K hit this 80 threshold and this full D cross the 20 before I add to this. I'm contemplating doing that. But the key is stay nimble, stay flexible. You don't ever want to get caught up in a rut in your thinking. You know, you decide that you're going to do something, and even if what you're seeing changes to the point where it's obviously turning against you, digging your heels in is never a good idea. I've said this before. I've heard it before. I love this saying. It's you know, the only thing worse than being wrong is staying wrong. Truer words in my mind have never been spoken. So a little bit of a slowdown in momentum. The full D on the 1 minute chart has, or it's crossing the 20, above the 20 threshold. It's not, the bar's not completed yet. Now it is completed. Confirming. But I'm not sure I want to add to this right now. I do see it coming up to this top end of the Bollinger Bands before slowing down. Well, I should say not before slowing down, before reversing. think I stayed too long in this trade. Even though it's moving back in my favor, I really should have gotten out of it here. Okay, not an ideal result. But better. Despite that move to the upside, it still tells me that short is my long-term way to go. Despite, this is trending up, but this is trending down. This is trending down. This trending up is going to be a reversal, I believe, because the full D hasn't completed its move down. It is trading towards this 80. It hasn't hit there yet. It is the brief respite here. Now it's turned back down towards it. What I'm seeing here on the charts tells me that that's going to continue. And now we're seeing a pretty big move back to the upside. Do I want to get on this? I do. No, well, tactical errors cost money. One way to play it when you see them move up like this is wait for these little moves down before you get in. And you can either do that by just, hitting the buy button when you see it pull back, or pick what you think is a good spot that it will pull back and just put your limit order in and see if it hits it. So now we're seeing a little bit of a changing picture on the 4-minute bar. We're seeing a histogram crossover. Right here, that bar has not stopped forming yet. You know, I almost think it wants to come to the top of, this is the forming value area on the volume profile. But I got out only because of this. I didn't want to suffer through this. It's not going to go straight there. I mean, it's going to be choppy. And emotionally right now, I just don't want to sit and stare at that. So, you know, self-awareness is really important when it comes to trading. You know, I mean, be honest with yourself. Don't put yourself in the position, or don't allow yourself to be put in the position where you have to make winning trades. You have to be, the market has to know that you don't care. And by that I don't mean you don't care if you win or lose money. Like, obviously you care. I mean, you're not doing it to lose money unless you're just, you know, some eccentric millionaire that feels guilty about being rich or whatever. But I mean, we're in it because we want to be successful. We're in it because we want to make successful trades. There's a difference between caring. There's a difference between obsessing about it. The market senses fear, greed. The market will rip your face off. That's just how it is. It's a level of not caring that allows you to have the discipline to get out of a trade when you know it's turned against you. You don't hang on to that false hope that, oh, it'll turn around. Because guess what? It doesn't. It's not going to turn around. It's going to hurt you more. So it's that, really what I'm talking about here is a lack of emotion. It's like walking into a dealership, and even though you test drive the car and you fall in love with the car, you maintain your poker face and you let the sales guy know, I will walk away from this deal. I don't need the car. I'm not in love with this car. I don't need it that badly. So, you know, if you want to take advantage of me, go find another sucker, because I'm not going to do it. It's that kind of a, that's what I'm talking about when I say not caring. So what's interesting here is that this rally has changed the picture quite a bit. Time frames are lining up to show upside, to demonstrate upside momentum across time frames. So even though the full D kissed the 80, I don't know that that was necessarily enough. Because full K is turning back up towards, is turning back up. We're seeing it here. This is continuing here. You know, we saw it turn here and here. So really, now from a 1 minute perspective, okay, we are in an overbought condition. This realistically will start the momentum move to the downside, the rotation to the downside, and the 4 minute 15-minute time frame, their tone will change as well. I don't need win news anymore. Up. So, and here's what's difficult. All right, looking specifically at the 4-minute time frame. The full D here is not moving in a way that I like, and what I mean by that is I want to see crosses below or above thresholds, to which I basically take that as a signal that, okay, this wave is over. It's now rotating the opposite. This is now reversal. And we're seeing it, right? But I really, like, my discipline tells me that I want, like, this is an ideal situation for me. Okay, full K and full D are both above, are both overbought. Full K rotates down, full D follows it. Okay, what we see here, though, is like, yeah, it's a downside move, but then it's kind of choppy. But okay, now we see some definite price action to the downside. So if you subscribe to the theory, focusing on full D, that when it crosses above, when it becomes overbought, that its tendency, whatever, despite whatever price fluctuations up and down happen, its tendency is it's eventually going to move down here. Obviously, I mean, that's obvious, right? The point being that you don't take your foot off first base until it does. You know, I've said, you know, and this is not my original, I gave somebody else credit for this. You can't steal second with your foot still on first. I leave my foot on first, usually. I don't always follow that system. I don't always follow that discipline, which some of it is just being flexible and some of it is just being undisciplined. You know, if I'm honest with you and myself. I don't like to take my foot off first until I see that both full K and full D have crossed into either overbought or oversold territory before I initiate a short or long position respectively. Now's a good time to check in and see what indices are doing. So not as big a disparity between the cash markets and the futures markets today. The VIX has really followed the lead of VIX futures. When the VIX was still elevated up in like the kind of like the 28 handle, VIX futures were like around 24. Now VIX itself is down 28% on the day. VIX futures are down, 15%, which is still a big percentage. But VIX is at 21.43, and VIX is at 20. VIX futures are at 20 and 15/100ths. I don't think shorting this makes sense until full D is overbought on the 4-minute, and until full K crosses back into overbought on the 15-minute. And actually now I think NASDAQ futures are more interesting. And even more so the Dow. Because in the Dow futures, full K, full D are both in overbought. Same thing with, the 4-minute time frame. On the Russell, still getting there. And NASDAQ, still getting there. So these markets are still, these indices are still trading semi-independently. Like a rising tide is raising all ships, but not equally. And I think this is a function, and I said that in my blog, which if you look at the description of this channel, there's a link to my blog. In addition to the AM, PM Traders Espresso that I'll publish in the afternoons and the mornings, or sorry, I just said that was redundant. The AM and PM Traders Espresso, the video log, I'm also going to be publishing a written blog that mirrors, somewhat mirrors what I cover in my video blog. And one of the things I observed there, and I said this during the live cast, is that I think the markets are still, traders are still discovering value. When this recovery is confirmed, we're going to see some indices do better than others. I think, my personal opinion, it's going to be the Russell. I can show you why later looking at the charts. The Russell is the only one that didn't move parabolic out of its price channel. So it didn't. So it got knocked down, but it wasn't like it was. I mean, if you look at the Dow, you look at the NASDAQ, you look at the S&P, they all broke out of their price channel. They went parabolic, and then they came crashing down. And I haven't even looked at those price channels today. So my suspicion is that those three indices I just mentioned, they've broken back up out of their price channel and are shaping up to do a parabolic move again. That's either going to mean that the price channel is changing to accommodate that outside move, or it's going to get pulled back down to earth again. But with the Russell, we just didn't see that. I'm trying to remember which symbol it was I did this drawing. wasn't that? Okay, well, I don't believe I lost my drawings, so I'm not sure why they're not showing up. Okay. Uh, all right, well, if I somehow accidentally deleted drawings, I'm not going to be happy. It's like that's what happened. No, it was that they're taking too long to show up. Okay, well, now that we've diagnosed that problem. So this is a channel that was drawn on based on what we saw in the weekly chart. Again, this is what I was referring to. The index moved parabolically. It has come back in, has not exactly respected this midpoint. I mean, it closed below it, then it closed above it. Now it's on its way back up again. My projection here is that we trade back up to the upper end of this channel without going through, without breaking through. Now the Dow picture, this is interesting. Okay, I don't understand why I click on week and it gives me 4 hour instead. Break out, get pulled back down, close right at the upper end of that channel, right? Not crossing down and then bouncing. So the Dow wants to be back in the stratosphere for now. What that's telling me is, okay, this is the new trend line, trend channel rather. So which still acknowledges, oh yeah, it was overbought. This is the new normal. Okay, so I just got an alert on the VWO. So it looks like VWO has found a bottom. I did buy back the short call on VWO yesterday, and VWO is the emerging markets. And that had the impact of hurting me a little bit today because the VWO is still down 24 cents, which took some value out of the long option. But, you know, I'm still sitting on, I think I bought that short call back for about a $200 profit. I want to say it was a $300 profit, but Yeah, I don't see a need to put a short call back on for protection yet. We're seeing a rebound on the daily chart. We're seeing improving histogram. On the weekly chart, we're seeing, a histogram crossover that isn't completely formed yet because it's still only Wednesday. And not a pretty picture on the month. Apple down 90 cents today. Autodesk is up 83 cents today. That's helping me. So I sold my short Apple call yesterday, but not seeing the follow through from Apple that I expected I would see. In the face of improving NASDAQ and NASDAQ 100 numbers, the fact that Apple's not, a part of that is disappointing. Looking at a shorter term Fibonacci. Oh, thank you for disappearing. That's just the same VWO alert because I got reverse crossovers, silent crossovers set. So see, Apple's bumping its head here against this 38.2% fib retracement. 164 is a key level of resistance. So that's a spot to watch. The stochastic is telling us rotation up is probable. So two signals, short signals. One is this close. Below the low of this candle. So this candle represented the high. It hit the high point of this move. When a subsequent candle closes below the low of that candle, that's a short signal. This level here, this 25,160, is acting as resistance right now, or support rather. If it breaks through, I want to go short. So if it hits 25,159, is it 25,162? So it's got 3 ticks to go. And it just broke below. Okay, this move is not making any sense. But that's what's happening. So now it's settling down. So in that case, YM made a move I wasn't expecting. Rather than wait for it to make a move that I was expecting, like stay in it and just get out. Because what's happening is this tells me to go short. This tells me it's about time to go short. This tells me, yeah, it's slowing down, but don't do it just yet. This one's telling me continued downside momentum, but slowing down. It's going to be a reversal here pretty soon. So the move of, yeah, it closes below the low of this bar on the 4-minute chart wasn't strong enough. With everything else that, looking at it, hindsight obviously is 2020, but with everything else that was going on, like this is eventually going to be right. That's what it's looking like. But just getting too much of this, there's not conviction on that move down. So it's a whipsaw. So not at all happy with what Apple's doing right now. That position isn't doing its job. So it's just about lunchtime. It's 11:30 almost on the East Coast. Dow's up 270, NDX is up 31, 32, Composites up 34 and change, SPX, the S&P's up 22. I keep saying down, they're up. Russell up 3.9, VIX down, VIX futures down. Dow futures up, NASDAQ futures up, ES futures up, Russell futures up. Complacency has returned to this market. Somebody took the punch bowl away, but then they felt bad, so they put it back. And yes, I am saying that kind of acerbically because I don't believe this. I believe this now. I do not believe that this means we're out of the woods. I've talked about assembling a shopping list and buying your favorites on this dip. I didn't say buy your favorites on this dip. I said preparing to buy your favorites at more reasonable valuations. My opinion is that these valuations are going to get a heck of a lot more reasonable if you just be patient. So I I'm waiting. So anyway, it's 11:30. I'm going to cut the webcast. I'll be back here in 2 hours at 1:30 Eastern Time, and I'll finish up the trading day with you. All right.